Is it a break or isn't it a break? Let's talk the 200-day moving average on the weekend update. Okay, so let's talk about the 200-day moving average. First, let's look at what I was expecting to happen. Now, this chart was from about 2 weeks ago. And what I'm showing you here is this is the S&P 500 in red. Here's its 200-day moving average in purple. And I said basically there's one of three ways that this thing is going to go. We're either going to come down, test the 200-day moving average, bounce off it like a trampoline. That would be good. Or we're going to come down to the 200-day moving average and lay on it kind of lazily and sit flat on it. That would be bad. Or, most directly, we're going to slice through it like a hot knife through butter, and that would also be bad. So we've got one good outcome, a successful test of the 200-day, and two negative outlooks, at least in my books, either flat or cutting through it, obviously. If we update to where we are today, it looks like we're getting scenario 3. It looks like we're slicing through the 200-day like a hot knife through butter. But we want to be careful about being too hasty here. In fact, if we look earlier in the year, there was another scenario very similar to this where it looked like, the market was just dropping in free fall. This is around March of this year. We sliced through the 200-day and it seemed like, it's time to panic. The market's about to drop seriously. But what you notice is the market then sort of turned on a dime and then took us to the highs for the year. So you want to be careful about being too hasty and calling a break of the 200-day. One of the ways that I like to look at the 200-day and set sort of like an objective standard, generally around 3%. If we can close 3% below the 200-day, that's when I start to get worried. That's when it starts to look like it is a failed test. But everything up until this point, and if you look at where we are today right now, we are not 3% below the 200-day. So it's inconclusive as to which of those three scenarios we're in right now. And if you look back at history, let's look at 2010. Now, we like to look at history because it's a little bit easier when the answer is here. What you notice is the market is going up. We went down, we tested on the 200-day, and then we had a successful test, and then we rocketed forward from there and made a whole bunch of money, right? What I want you to do, though, is try and pretend like you don't have the answer, like you don't know that this is coming in the future, and look at what happened in the market. From a high of around 1,200 on the S&P, we dropped to 1,100, which is where we tested the 200-day, all the way down to a low of 1,000, so that's almost a 20% drawdown, where we began our testing phase, and then eventually it was determined that that test was successful, and the market bounced and went higher from there. Right? It's a lot different. It's easy when you look at this, you say, oh yeah, just hold on to your stocks, they go up. But it's a lot more difficult if you put yourself into the moment, not knowing that the future is going to be so bright, and all of a sudden now you're in this testing phase. And as of the bottom, if you were to look backwards at the last 2 to 3 months, it looks like the market is almost going straight down. It kind of feels how it feels today. Of course, this was a successful test, and most interestingly, remember I was talking about seasonality about a week or two ago. This bear market, this correction, this 200-day test ended in the fourth quarter of 2010. Something to pay attention to. This is Charlie Biello's work. The market is now 10% off its high, and so I'm getting a lot of calls, hey, what's going on? This market is feeling bad. What should we be doing? With my eyes, as I look at this market, this seems very normal to me. So here's the S&P 500 intra-year decline. So this gives you a sense of how often does the S&P drop this much off of its peak, 1, 5, 10, 15, and beyond. And what percentage does this happen? How many times, how many years do we see something like a 1% decline every year? How many times do we see a 5% decline? 94% of the time. How often do we see a 10% decline where we are now? Well, it actually happens more often than it doesn't happen. On average, every 1.6 years, we're going to get a 10% decline. So everything that the market's doing right now, getting a lot of nervous calls, I'm not worried about any of it. It's very normal for the market to go down this much. Even a 20% decline like we saw last year, that happens once every 4 years, 25% of the time. So it's only these bigger drawdowns, 25, 30, 40, and 50. These are the ones that you want to avoid. These are the ones that actually start to become rare occurrences Everything less than that, 20% or less off of the highs, is pretty normal. This is why you want to have an investing plan, and most importantly, during times when the market's coming down, you want to stick to it. And that's one of the things that we like to do at Jaffe Tilchin. One of the things that we focus a lot on is keeping you sticking to your plan. So what the market is doing seems pretty normal to me. I'm not worried yet. I would be expecting almost an immediate tenor change in the market when we get to next week. And remember, one of the reasons why I think that is because if we look at earnings and what's going on, this is the most up-to-date data that I have. Just about 42% of companies have reported now, so nearly half. And what were we expecting? We wanted to see a bottom in earnings and earnings start to increase as we look forward into the future. So far, earnings expectations are we're going to come in at positive 0.5% to positive 1% on higher revenues. So this looks almost exactly like what we would expect to see. We talked about Visa on Wednesday, saying that the consumer seems fine, the economy seems chugging along, corporate earnings look good. So I'm not worried about this sell-off. I'm not worried about this correction. I think in the fullness of time, it will resolve as a successful test of the 200-day. Just my opinion. Doesn't have to work out that way, but that's what I think. There you have it. That's your weekend review. Let's check in next week and see how the market has changed. See ya.